Hello, everybody. It's John Edwards from Edwards Wealth Management. And today we're diving into the world of annuities, specifically Registered Index Linked Annuities, also known as RILAs. If you've been curious about what RILAs are or how they might be able to benefit your financial planning and management, you're in the right place. Let's get started with the basics. What exactly is a registered index linked annuity or RILA? RILAs are a type of annuity contract that offers a dynamic blend of features from both fixed and variable annuities. They provide potential growth tied to a market index such as the S&P 500 while also offering a level of substantial protection against market downturns. Unlike traditional variable annuities, RILAs are designed to limit the downside risk by capping the amount of loss that you can incur. This makes them a very attractive option for investors who are looking to participate in the market growth without full exposure to the market volatility and downside. So, how do RILAs work? When you invest in a RILA, your money is allocated to an account that tracks a specific market index. The performance of this market index determines the interest that's credited to your annuity. However, there's a twist. Your returns, they are subject to different caps or participation rate. A cap is the maximum return you can earn during a set period, while the participation rate determines how much of that market index gain that you'll participate in. For instance, if the market index grows by 10% and you have a participation rate of 80%, then you'll earn an 8% return. And if there's a cap, let's say the cap is 7%, even if the market does more than that, you'll only earn 7%. However, in the marketplace currently, there's a lot of options without any caps at all, which is great. Now, let's talk about the different types of protection features RILAs have. They often come with a buffer and floor to protect you on the downside. A buffer will protect you against a certain amount of loss. For instance, a 10% buffer means that you won't lose any money if the market drops by 10% or less. If you have a 20% buffer, that would mean that the first 20% of losses would be taken by the insurance company. So, for instance, if you were down 30% and you had a 20% buffer, you'd only be down 10%. Now, a floor, on the other hand, it limits your maximum loss altogether. So, for instance, if we had a 5% floor on a product, that means the most you could ever lose is 5%, regardless of how much the market drops. Now, let's move on to some of the benefits and considerations of RILAs. One of the main benefits is the potential for much higher returns compared to fixed annuities thanks to the market participation. Additionally, the built-in protection features provide confidence for investors worried about market volatility. And there's more good news right there. And over the last year or so, it's really been an excellent time to invest in RILAs. Since interest rates are higher than they have been in recent years, the potential returns on these products is a lot more attractive. It's important to note, though, that RILAs change their rates every month in most cases, so it'd be wise to take a close look at them now, especially since many experts are expecting rates to continue to decrease this year. Another key advantage of RILAs is that unlike many income-based annuities with high fees, many of these have no fees at all. This makes them a very cost-effective option for those looking to invest in annuities without having to worry about those high costs eating into your returns. So, is a RILA right for you? Well, RILAs can be a great addition to your retirement portfolio if you're looking for something with growth potential that also has some kind of protection. And they can really help to bridge that gap between conservative investments and more aggressive market based solutions. However, they might not be suitable for everyone. It's important to assess your own personal risk tolerance, your investment goals, and financial situation. I always recommend that you consult with a financial advisor to determine if a RILA fits into your overall retirement strategy. They can help you understand the nuances and help you make an informed decision. Well, that's all I have for today. Thanks for watching. I hope you learned a little bit about RILAs and that maybe you felt this information was helpful. We'll see you next time. Have a great day.